What's up guys, Matt here, back with another video. The entire process of purchasing a Tesla is like none other. You don't even have to set foot in a Tesla showroom or talk to anyone to purchase a Tesla. The most difficult part of purchasing a traditional vehicle is the financing portion of it. The dreaded long wait times of having to negotiate back and forth with a car salesman is just awful. I've purchased a couple of cars before, and buying a Tesla was by far the easiest car buying experience I've ever had in my entire life. Tesla revolutionized this by making the purchasing process so innovative. The site is very user-friendly and straightforward, and it's really easy to apply for a loan through Tesla. So what credit score do you usually need to finance a Tesla? Let's find out. Let's get straight into it. Tesla financing has no minimum credit score requirement, but you'll probably need at least a decent credit to be financed through them or with another lender. You're probably now asking yourself, if there is no minimum credit score, then how do I get approved for a loan? Generally speaking, a 720 to 740 credit score can qualify you for excellent rates Tesla has for their vehicles, but you'll definitely need to shop around to find the best rates. The banks Tesla has partnered with will look at your whole credit profile, including your income, past dues, collections, debts, etc. And you may have to definitely put down a nice deposit if they don't like what they see. You can get financing with almost any credit score, however, the caveat is that your rates will vary drastically. It's basically the same with any loan. The higher your credit score, the better interest rate you'll get. If you have a really bad credit score, you will likely be refused a loan. That's just how it works. Definitely check with your local credit union and banks on top of applying through Tesla to see what rates you qualify for. For me, I wasn't planning on financing my Model Y until I saw their crazy offer of being able to finance it for just 2.49%. At this interest rate, I get a better return investing my money literally anywhere else, especially now with the crazy returns we have seen across pretty much all asset classes. After applying for financing, I got an email 4 hours later that I was approved for a loan. Before this, I played around with Tesla's own financing and leasing page that includes a handy calculator for you to work out in advance how much your financed Tesla will cost you per month, as well as how much you'll have to pay at signing. This works for both leasing and financing options. It should be noted, however, that the calculator works at Tesla's minimum APR rate of 2.49%. You should be aware that it could change depending on your actual credit score. The results of you using the finance calculator are by no means binding and are only meant as a guide. The loan I got approved for was for 2.49%, and I decided to do a 60-month loan. If you're considering financing, a tip I will give you is that Tesla's delivery times are many months out in the future, and when you apply for a loan through Tesla, they do a hard inquiry on your credit. A hard inquiry or a hard pull occurs when you apply for a new line of credit, such as a credit card or a loan. It means that a creditor has requested to look at your credit file to determine how much risk you pose as a borrower. Hard inquiries show up on your credit report and can affect your credit score. At least one hard pull of your credit report is required by Tesla. However, for some applicants, additional inquiries may be needed as Tesla works to find the best credit offer possible. For Tesla, the credit application they pull from your credit report is valid up to 60 days depending on the lender. If your delivery date falls after your credit application expires, you may need to start a new application. And this could result in you getting a less favorable interest rate since your credit score may have already been affected from your previous application that Tesla ran. Now, the advantage of working with a bank instead of going through Tesla directly is that you can get pre-approval and thus know your exact budget before you begin car shopping. This helps you narrow down your choices to better fit your budget. It'll remove the temptation to spend the unnecessary funds on optional extras and upgrades if you know it's not an option. Then it gives you the focus to resist the upselling sales pattern. The advantage of working with a credit union, on the other hand, is that they generally offer better interest rates than banks and can be more flexible with those who are currently in the poor credit zone. Of course, while you have these options, none are quite as convenient as just being able to finance your new car with Tesla directly. You're probably now asking yourself, what are the factors that make up my credit score? There are about 5 of them. The first being payment history. Banks want you to pay back what you borrow. That's why your payment history, which is the history of how many on-time payments you've made on loans or credit cards, is a major factor affecting your credit score. Making late payments will cause your payment history to be less than 100%, which can harm your credit score. Credit utilization is the next factor. Credit utilization is a way of calculating how much of your total available credit you're using. Generally, it's best to keep your total credit utilization as low as possible. Most experts suggest keeping it under 30%. The age of accounts is another factor. The age of credit history indicates how long you've had credit cards or other loans open. The longer your average account age, the more it can help your credit score. Meanwhile, having several newly opened accounts may not help your credit score because it will lower your average account age. The fourth factor is account mix. Your account mix, or the types of credit accounts you have, may be a factor in determining your credit score. Lenders generally like to see that you have a history of making on-time payments on a variety of credit accounts rather than just one type. So a mix of credit cards, plus other loans like auto loans, student loans, or mortgages, may help you build your credit score. Inquiries is the fifth factor. Hard and soft inquiries happen when you apply for credit, or sometimes when you set up utilities or rent an apartment. Hard inquiries typically stay on your credit report for about 2 years. And if you have a large number of hard inquiries in a short period of time, it may lower your score because lenders could view you as a borrower who's seeking credit. Buying a Tesla is a pretty expensive proposition, especially if you want to buy a more powerful model with a longer range. It's easy to get lured in with the prices that are surprisingly under $40,000, only to discover that it has limited range and power compared to what you'd hope for. For those looking for a more affordable way to buy a Tesla, for a way to spread the cost, financing may be a great option, especially with the interest rates being so low right now. If you don't have great credit, there are a couple of options you have. The first is you would have to be willing to pay a higher interest rate. If you have poor credit, lenders will see you as a riskier applicant. You may be able to get a car loan, but you'll likely pay a much higher interest rate than someone with a good or excellent credit will. The second option is to apply for a loan with a cosigner. If your score is really low, you might consider applying for a car loan with a cosigner. A cosigner is someone such as a family member who is willing to apply for a loan with you and ideally has good to excellent credit. A cosigner shares the responsibility for the loan, reducing the lender's risk. You're more likely to qualify for a loan and get a lower interest rate than if you applied on your own. But if you're unable to make the loan payments, your cosigner will be stuck with the bill. I have 4 recommendations I can give you on ways to increase your odds of approval and a better interest rate. Number 1, work on your credit score. Working on your credit score could unlock lower interest rates and pre-approvals by more lenders. Your credit score is largely dictated by whether you pay your bills on time and how much debt you have. Focusing on these 2 important factors could be a huge help in improving your credit. Number 2, save for a down payment. Making a down payment could help your chances of getting approved for a loan and may result in a lower interest rate. Plus, paying more upfront will decrease the amount you need to borrow, which can mean less interest paid overall. Number 3, consider a cosigner. Like I mentioned earlier, having a cosigner with a higher credit score on your auto loan may help you get approved more easily or get a better interest rate. Number 4, keep shopping. If you haven't found a rate and loan terms that work for you, continue looking. There are sites out there that can help you by showing your estimated loan term, interest rate, and monthly payments across various lenders. If you're able to get Tesla financing with the terms you want, go for it. The reality is that purchasing a Tesla is not inexpensive. Having every financial advantage accessible to you is consequentially critical. If Tesla's in-house financing solutions are unattainable for you, you have other options that you might explore. In certain situations, working through a bank, credit union, or other third-party lender may be the best option to get the best terms and conditions. As with everything, it's wise to utilize your resources at your disposal to estimate how much it will cost you ahead of time. Work out several alternative payment scenarios using Tesla's financing calculator to discover how much you can truly afford. If you have a good credit score, extending the cost of your Tesla over 36 to 72 months might be a wonderful method to purchase a Tesla you want with more range and features. There is no exact credit score you need to get the best financing rates when buying a Tesla. And like I mentioned earlier, they look at everything from your whole credit profile to income and past dues to collection and debts. My recommendation would be to have at least a 720 credit score when applying for a loan if you're aiming for the best interest rate that Tesla is currently offering. Let me know in the comments if you enjoyed this video and if I should do more of these in the future. If you enjoyed this video, please drop a like if you want to, and be sure to subscribe to stay updated on all things Tesla related and more videos like this in the future. If you're in the market to purchase a Tesla and want 1,000 free supercharging miles, use my referral link in the description when ordering a Tesla, and we will both get 1,000 free supercharging miles. Also, follow me on Instagram to stay updated on what it's like living with a Tesla and behind the scenes.